All right, welcome back to the channel. Today we're going to be looking at free cash flow. This is the secret sauce of successful companies. Okay, so we're going to have a couple of things to define: the free cash flow yield. We're going to talk about why both of them are important, why free cash flow is important to a company, and why free cash flow yield is important to us as investors. Okay, so what is free cash flow? Generally, free cash flow is the cash a company generates after you've subtracted the cost for operating expenses and capital expenditures, right? So everything a company spends on equipment, purchases of property, plant and equipment, you subtract that from the operating cash that a company generates over a specified period of time. For our purposes, we're going to be using the last 12 months as the benchmark to evaluate a company's free cash flow and their free cash flow yield. Okay, so mathematically, free cash flow just uses the operating cash flow, how much a company brings into their coffers over the defined period, and then we subtract the capex, which we call the capital expenditure, to arrive at the final result, which is free cash flow. So now let's look at an example. All right, we're going to use a company called Fortinet. Now, Fortinet is one of those companies that in their earnings presentation, they tend to do a calculation on behalf of investors to show us or to give us a sense for what their free cash flow actually looks like. And so here you can see that the arrow points to the line in the earnings presentation for free cash flow. And for the end of Q2 2025, Fortinet generated a free cash flow of $284 million, right? So you can see the GAAP cash flow from operations, which came in at $451.9 million, right? And the amount that is spent on capex, and in this case, it was used for the purchase of property and equipment, came in at $167.8 million, right? So when you subtract that from the GAAP cash flow from operations, you can see that it comes to $284 million, okay? So that's from a very high level. That is how free cash flow is generated. But in the industry, there is always a little bit of disagreement for how you determine the capex, right? What the company, spent their capital on, right? But for our purposes, we're going to use the example that the company actually provided. And in this case, they told us that they used $167.8 million for capex out of a $451 million cash from operations. Okay. And so now, if we wanted to calculate the free cash flow yield, right, there are two different ways to do it in the industry. One of them is on a per share basis, right? So you take the free cash flow per share and you divide it by the share price in the market. Now you multiply that by 100%, or you use the total free cash flow and divide that by the market cap, right? When you multiply that by 100%, it gives you the percentage value, right? So one is on a per share basis and the other is an aggregate strategy. And so using the example from before, which is Fortinet, we can see that as of the close on September 5 in 2025, the company's stock price closed at $78.83 a share, right? And the total number of shares that the company has available in the market, right? We call it shares outstanding. The total number of shares outstanding comes in at 766.27 million, right? So when you take that number and you multiply it by the share price, it gives you the market capitalization for Fortinet, which comes in at $60.40 billion. Okay, so if the market cap is $60.4 billion, all right, and in the last 12 months, Fortinet brings in a free cash flow of $2.033 billion, right? Now we can use these two metrics to do an aggregate calculation for what the free cash flow yield would look like. And so in this case, $2 billion divided by $60.4 billion comes in at 0.0336, which when you multiply by 100, it gives you 3.36%, right? This is pretty decent, considering that the 10-year yield in the United States for the US government bonds is trading between 4 and 5%, right? And so Fortinet, growing as fast as it does, is giving us a 3.3% yield, which is not too far from the risk-free rate. And so if you wanted to use this as a guide, right, you would usually have to do that benchmark. But we're going to come back to this in a few minutes. So what does free cash flow enable, right, for a company? So the first thing it does is it enables a company to be able to reinvest in itself, right? So this means it can buy even more property, plant, and equipment. It can pay down debt. It can pay out dividends. Certain companies pay out dividends and others don't. In this case, Fortinet does not pay out the dividends, right? They prefer to reinvest that capital in the business and also to do share repurchases. So which is another thing that free cash flow enables for a business. So they're able to buy back their stock, which also reduces the number of shares outstanding, and as a result improves the free cash flow per share, right? So when you take the total free cash flow divided by the total number of shares outstanding, it gives you a sense of how much free cash flow the company is generating for each share that it has outstanding. So every time the company buys back their share, it reduces the number of shares outstanding, but also improves the free cash flow per share value. And so most times you want to see what that has tracked over time. And then this enables strategic acquisition. So a company that has a lot of cash can decide over time to do an accretive acquisition that improves the value of the business and the volume of revenues that they bring into the coffers, right? And then they could also keep their free cash flow as cash, right? So depending when the market presents an opportunity, either the stock price declines or they find an opportunity for strategic acquisition, or they can use that to pay down the company's debt, right? So this allows the company completely deliver their balance sheet. And so now, what does free cash flow yield tell us as investors, right? So we know that high free cash flow yield values signals to us that a company's stock is potentially cheap, okay? And in most cases, you can either see the free cash flow yield improve because the company is starting to generate even more cash and the stock price hasn't moved much, or the stock price has declined significantly, right? In those cases, it kind of hints to us that there is a possible bargain in this company's share price. Another scenario is that the annual cash flow is a high proportion of the company's equity value, right? So this means that the company is generating a lot of cash relative to the market cap. So in the case of Fortinet, it's generating $2 billion on a 60 billion market value, right? Or an equity value. And free cash flow yield also helps us compare what this investment is potentially giving us relative to the risk-free rate. And in this case, risk-free rate is the US government bonds, okay? So that is free cash flow yield. Thank you for listening. See you in the next one.